So the last operating guideline is constraint, in which we will focus on the materiality. Materiality. Now, what is materiality? According to materiality, right? So according to materiality, we may not need to disclose the information in financial statement if that information do not give any significant impact on users decision. If that information has an insignificant impact, insignificant impact means not major impacts, in fact do not affect the user's decision. If any information do not affect users decisions, we may not need to report that information. So now let me explain you with example. Let me give you example. For example, the sales is 7,980, right? And cost, let's say 198.40. So profit is 600.40. This is the profit, right? Can you tell me, if I write not $600.40, if I write $600, but I do not write this number, I just write 600. I remove this 40 cents or $0.40. I remove it. Do you think this number will affect users' decision? It will affect them a lot if I change this number. If I,
No.
no, of course not. Why? Because the amount, this amount is insignificant. Insignificant means this amount is really small. If I say my profit is not 640, but my profit is 600, do you think I am hiding any information from the users? Do you think my information is not true? If I say my profit is 600, only 600, do you think this information is not true?
No.
No, it's still true. Why? Because the amount is very small. And I removed this 40 cents because it's helped me uh, to present information very clear. Because if any number is getting bigger after 0.00 something, then it's very hard for accountant to find mistake if you have any kinds of mistakes. So in order to simplify the numbers, I remove this 40 cents. All right. Okay. Let me give you another example. My sales is, this is per unit. For example, my sales is $1.80 per unit, right? And my cost is, no, that's right, it's $2, right? $2. And my cost is $1.40. And my profit is $1.40, right? Can I write down $1, not 140? Can I do this?
Yes.
No.
No.
Yes or no?
No.
I don't think so.
No.
No,
No.
of
I
course
don't.
not. Because this number, comparison with this number is
Not small.
not small. This number is big. This number is significant. That's the meaning of materiality. That is materiality. We may not need to disclose any information. We may not need to disclose any information which has insignificant impact on users. So I am not disclosing this information. But if any information is significant comparison with your main number, so means if I remove this 40, so means 40 divided by 140. So it means if I write down like this, so it means my profit is reduced by 28%, right? My profit is, if I don't report $1.40, if I report only $1, so it means this is a 28% in my profit. The contribution of this number is 28%. 28% is not a small number, it's a big number. That is the meaning of materiality. You are allowed to hide any information. You are allowed to not to disclose any information in financial statement, but the condition is that information do not affect the users. If you are hiding any information and that information give a very significant impact on users decision, maybe because of that information they can make money or lose money, then you should not hide that information. You must disclose that information. That is the meaning of materiality. Everybody understand materiality? So that's all. Operating guidelines are finished. So topic 1 is finished. Now we start with topic 2. So I'll give you 2 minutes. You quickly have a look at your topic 1. If anything you do not understand, then you ask me. If no question, then we start with topic 2, right? Okay, everybody. So anybody has any question? Anybody any question, or we start with the next topic?
Sorry, sir. Can you give me more some inspe- example for unearned revenue?
Revenue means selling product and service called revenue. Whatever money company make, whatever money company earn, that's called the revenue. Like as selling product and service called revenue. Revenue means sales. Sales means selling product and service to make money.
Yes, I mean, you give me more example for unearned revenue. Yeah.
Unearned revenue. Unearned revenue means when company receive money in advance. Like as for example, the same example that I mentioned in the previous lecture. My shop is about I'm making a furniture. So let's say I am making a table, chair, and everything. So one day you come to order a table or order a chair for me, chair for yourself to make it. So now I said, okay, if you want me to make a table or chair for you, you have to pay me money in advance because I have to purchase raw material. So you are paying me money in advance. So I received this money, but did I give you product? No. So I receive money in advance, become my unearned income. So remember, the meaning of earned is when you supply product, you worked, you earn money, right? You work to earn money, called earned income. Oh, sorry, earned income. But if you do not provide product, but you already get money, you didn't work for that money. So this money is not earned money. This is unearned money, unearned income. So anything, any kinds of income that you receive in advance, that is unearned income. So for example, if university will give me 1 month salary in advance, let's say university is giving me salary for the month of January or give me salary for the month of February. So the salary for January and February for me is an unearned income because I haven't provided any service to university. I haven't taught any subject to any students. So that income become my unearned income. So that income is my current liability. So I have obligations to provide service to the company, to the university, to convert that unearned income into earned income. So if you have any kinds of unearned revenue, that revenue do not belongs to your income statement because income statement means earned revenue. So anything unearned is belongs to your current liability.
Yes, thank you.
All right, if no question, then let's start with the next topic.
Sure.
Yes.
Can you tell me more about constraint uh, in operating guideline?
Okay, what is constraint? Right? Right, that you
Yeah,
mean?
no. You mean I mean you explain that
What do you want me to explain? Constraint, the meaning of constraint?
Uh, for example, in constraint, the company. For example, the constraint in the company.
Okay, so give you example about constraint in company.
Yeah.
Okay.
Yes.
Remember, constraint is not any item or anything. Constraint is just a kind of idea. Constraint is a principle. It's a rule. The rule says that the meaning of constraint means you have a freedom to report or not to report information in your financial statement. You have your own freedom. That's the meaning of constraint. Like as materiality. Materiality is a constraint. Why? Because under materiality, you have a freedom to report 640 cents or you report 600. You don't have to report 40 cents. You have a freedom to not to report any information in the financial statement with the condition that this information do not affect the user's decisions. All right. If any information affect the user's decision, then you must disclose. That's the meaning of constraint. Constraint is not just type of like as principle. What is principle? Principle is a guidelines about basic things about accounting process or records about accounting process. So same thing. Constraint is just idea about the freedom, idea about the liberty. All right. Le Tu Zung Le Tu, are you there? Turn it on your camera.
Teacher, can I have a question?
Yes.
Can you explain me about conservatism?
Conservatism. Conservatism is the assumptions. The assumption says that, sorry, it's a constraint. It says that future income is not a present income. And that makes sense. Something you're going to earn in future, can you record as an income? No, because you haven't earned it. Same like as unearned. Unearned, you're going to earn in future because you provide service or you provide product in future. That's why unearned income. But do we have any unearned expense? No, we never had that kind of expense. So the idea is that the expense you're going to pay in future, you can pay now and you record. But the income that you're going to earn in future, you cannot record as a present income. That's the idea.
I got it. Thank you.
Yeah. Now let's start with topic 2 if no question. Okay, so let's start with the topic 2. Topic 2 is accounting cycle. Topic 2, an accounting cycle. So topic 2 is an accounting cycle. All right. What is accounting cycle? Accounting cycle is basically process to prepare financial statement. It's a process to prepare financial statement. So this accounting cycle, we have 5 steps. This accounting cycle, we have 5 steps. So we look at all these steps one by one to prepare financial report. So the first step is source documents. Source documents. Second step is journals. Third step is a ledger. Next is a trial balance. And the last step is the final account, or we call it financial statement. So we have 5 steps to prepare financial statement. All right, so this is the accounting cycle. We call it accounting cycle.
I'm sorry, but I heard something weird.
Sorry.
It sounds weird. I don't know.
Can you tell me what?
No, nothing.
Okay. So we have 5 different steps involved to prepare financial statement, right? So we will start with the first step. This is a source document. It's just the information. So let's start with the first one. So idea is that we will look at all these 5 steps one by one to understand, to prepare financial statement. And without these steps, we directly cannot reach to the financial statement. But I will explain you this step, then you will understand why. All right. Okay. So this is 1, 2, 3, 4, and 5. So we have 5 different types of source of finance, different types of steps that help to prepare financial statements. So let's start with the first step, which is a source document. So what is source document? Source document is just information, any kinds of economic event. Whatever economic event happen in a company, this is called a source document. Any event happened in a company which has money value, which has a monetary impact. Anything happen in a company and that activity and action has a money impact, maybe because of this action, maybe money in or maybe money out. Like for example, we purchase raw material, money out. Purchase raw material is a money event, monetary impact. You sell asset, money in. Borrow money from bank, money in. Sell share, money in. Pay salary to employee, money out. Pay interest to bank, money out. Pay dividend to shareholder, money out. Right? So this is called a source document. Evidence of any transaction. That transaction is happen and it has a money impact. So now I'll show you what inside source, whatever I mention here. So let me write down. So source documents. So step 1 is a source document. Source documents, for example, A is purchase raw material, by cash. For example, $1,000. This is your source document. This is just example, all right? Examples of source document. Some examples. Let's say we sold machine. Let's say $1,500, right? Third one is we paid rent. Let's say $300. And maybe this one is borrow money from bank. Borrowed from bank, let's say $3,000. This is called a source documents. That's the meaning of source documents. Everybody understand the meaning of source documents?
Yes.
That's all about your step 1. So first of all, you have to find what is this source document. Source document will be given in your question. You don't have to prepare source document, right? Source document is given in your question that we purchased this, we sold this, we paid this, we received this, whatever, like this. Anything has a money impact, that information will be given in your question. You don't have any other information, so you don't have to find this is source document or this is not source document. No, whatever information will be given in your question, you have to, that information is a source document, so you will use source document to prepare step 2. So step 1 is easy. Step 1 will be given in your question. Everybody understand? Now let's move on to step 2. So now step 2 is your journal. Now, what is journal? Another name of journal is book of prime entry. Why we call it book of prime entry? So journal is a second step. In fact, it's a very first step when you record information in your account, when you enter information in your accounts, in your book. Book means account. So technically, journal is the first step because source document is given for you. Company purchased raw material. This is source document. Now, how you can write down this information in your account? So journal will help us to record all the source document in the accounts. So technically, journal is the first step. Everybody understand that? All right. So another name for journal is a book of prime entry. So journal help us to record or report all the source document. But the question is how? How journal can do that? Right. So journal is a book of prime entry which helps to enter all source documents in account, right? In accounts or in your book or in your system, you can call whatever you like. It helps to enter all source documents in your accounts, source documents in your accounts. But now the question is how? How journals can help? All right. How journals can help? Let's have a look. If you want to know how journals can help, we have to look at some rules and regulations. So we will look at two things. One are the rules. We have to follow some rules to enter source document into accounts. First thing, we have a look at some rules, and second things, we will follow some steps. Journals, it has its some steps. With the help of rules and step, we record all the source document into accounts with the help of journals. So this is called journals. Everybody understand? Now we will have a look what are the rules that journal has, and you must remember those rules. Plus, following those rules, we will do some steps. All right. Journals. We call it journal or we call it journal entries. All right. Now, we will have a look at some rules first. What are the rules we have? And make sure you remember some rules, right? Always remember, when you enter any information in journals, you use the word debit and credit. We use these two words, debit and credit, to enter the information. The abbreviation of debit is DR and the abbreviation of credit is CR. So we use the word DR and CR to report the information. All right. So DR, now DR means increase, decrease, plus, minus. So DR may be increase, maybe decrease, CR may be increase, maybe decrease. So let me explain you rules and then you understand it. So what are the rules? Remember, assets. If any assets increase, you recognize as a debit. Debit assets means assets increase. If assets increase, you call it asset debit. If assets decrease, you call it assets credit. All right, the first rule, remember, any asset, any current asset or any non-current asset. If any assets increase, it will be debit. If any assets decrease, it will be credited. All right. Next is liability. If any liability increase, liability will be credit. If any liability decrease, liability will be debit. Right. Third is equity. If any equity increase, equity will be credit. If any equity decrease, equity will be debit. So these are the debit and credit rules for assets, liability, equity. If you have any kinds of income, any profit or any gain, they are always credit. Any profit, any income, any sales, any gain, always credit. If you have any expense, any loss, or any cost, that will always debit. So these are the 5 rules you have for 5 component. All right. So you have 5 rules for 5 component. You must remember these rules. Not only these rules, you also remember what inside asset, what inside liability, what inside equity, what inside income, what inside expense. Because when you have a source document, you have to check in this source document, is it asset or is it liability? Is it equity? Is it income or is it expense? You must know that, right? Remember this thing. So that's why in the last lecture I said it, make sure you remember everything. Otherwise, it will be hard for you to move on. So these are the rules. Now, let's have a look at the steps. Without these rules, we cannot do steps, right? So now what are the steps? Steps to prepare journals. Step number 1. Wait for me. Okay. Step number 1 is find source document. Find source documents. We already have source documents. So for example, I use the first source document that we used before. What was the first document? Purchase raw material. All right. So let's say our source document is a purchase raw material by cash. And amount is, for example, The amount was, how much was amount? 1,000. 1,000. So for example, this is your source document. So find source document. So we already have source documents, right? Now, second step for journals is find which accounts affected in source documents. Find which items, or you can call it item or you can call it account, which item or which accounts is affected. Like as here, can you tell me in this source document which item affect? If I say affect means in and out, increase or decrease. If I say affect means which item increase, which item decrease, or maybe which two items increase or both item decrease. Purchase raw material. One is raw material. When you purchase raw material will increase or decrease?
Increase.
Increase. Raw material increase. And what is another item affect? One is the raw material.
You also lost your money, spend your
Yes.
money. So
Second items affect is cash. Cash increase or decrease?
Decrease.
decrease.
Decrease. This is your step 2. So you have to find which 2 item or 3 items, generally two items. Remember, it's not always one increase, one decrease. Sometimes both increase, sometimes both decrease, sometimes one increase or one decrease. Remember that. Everybody understand? It's not always one increase, one decrease. No. Sometimes both increase, sometimes both decrease, or sometimes one increase, one decrease. Keep in your mind this thing. All right. So when you have a more examples, then you understand that not always both items are increasing. All right. Oh, sorry, not always one item increase and one decrease. Maybe both items are also increasing. So everybody understands step 2? You have to find which items are affected. Okay, another simple way to understand which items affected, just give and take. You can, by looking at give and take, you can easily understand which 2 items increase or decrease, or one increase, one decrease. So once we have done step 2, then step 3. Now find these items, the items for step 2. I'm writing 2 means step 2. The items for step 2 are increased or decreased. We already done it. We already done step 3. So like as raw material, when company purchased raw material increase. So raw material item increase. All right. Cash item decrease. All right. So I can write this one like this, so you can easily remember that. I can write down here. We find the items. So we have 2 items. One is raw material items affect, right? And second is a cash effect. This is your step 2. Step 3. These items increase or decrease. So raw material, increase or decrease? Increased, right? And second items is the cash. Cash increase or decrease? Cash decrease. Why cash decrease? Because we pay cash. This is your step 3. Everybody understand until step 3? Any question? Now, step 4. Step 4 is find these items. These items are, is it asset or liability or equity or income or expense? Find these items. So these item means we have 2 items, right? One is raw material and the other one is cash. Now you have to find this raw material. Raw material, is it asset? Is it liability? Is it equity? Is it income? Or is it expense? What do you think? Purchase raw material.
This is our access.
It's normally expense. It's normally expense. This is not asset. Asset is a closing inventory, the inventory which is left at the end of the period. This is your manufacturing cost. This is your operating cost, cost of material. So this is normally when you purchase something, except the asset, that's your expense. So raw material is your expense, right? Raw material is your expense, because normally purchased raw material belongs to income statement. This is your cost, this is your expense. Now cash. What is cash? Asset, liability, equity, income, or expense? What is cash?
Cash is assets.
Which asset? Which asset?
Current access.
Asset.
Yes. Cash is your asset. So cash is your asset. This is your step 4. Everybody understand step 4? Okay. Now, step 5. Step 5 is convert so I forgot to write one thing here. Here always increase sign, and here is cash decrease sign. So we follow everything. So convert, increase, and decrease into debit, credit, following rules. Now we have up and down here, increase, decrease. Now we're gonna convert this increase, decrease into debit and credit following the rules. We have a rules. Rules talk about what rule says. Rule says what will be debit and what will be credit, right? That rules tells us about. So now we're going to follow the rules to find this increase, decrease into debit and credit. So step 5. So step 5. Raw material. What should I write down? Raw material will be debit or raw material will be credit? What do you think?
Debit.
Raw material debit. Why? Because raw material is
Expense.
expense, and expense always
Debit.
debit. So raw material will be debit. Everybody understand raw material? Okay. Cash. What do you think? Cash will be debit or credit?
Credit.
Cash will be.
Credit.
Why? Because cash is asset. When asset decrease, asset will be credit. So that's why cash credit. Now in step 4, after step 4, forget about up or down. After step 4, up and down, finish. Don't use this up and down sign anymore, because we already convert up and down into debit and credit. Everybody understand? Now step 6 and finish. Step 6 is complete journal entry. Journal entry. Always remember, debit come first, then credit. We always start with debit item first. So what will be the journal entry? The journal entry is raw material account debit. How much? $1,000. Debit, always write down first. Debit item, we always start our journal entry with debit items. And cash account, everything is account. All item means account. Can you see item or account? Account credit. Amount is 1,000. And remember, that's it, finish. And remember, your debit must be equal to credit. If your debit item, debit value is not equals to credit value, your question is wrong. Why? Because we purchased raw material. The raw material value is $1,000. That's why we are giving $1,000. So we are giving $1,000. So that's why cash $1,000. That's why this should be equal all the time. You cannot write down raw material debit 1,000 and cash account credit and you don't write any number. If you don't write any number, your question is wrong. Your journal entry is wrong. All right. And remember, this is your answer. This is your answer. Step 1, 2, 3, 4, 5 is not your answer. Step 1, 2, 3, 4, 5 for your rough paper, on your rough work. You don't have to show me step 1, 2, 3, 4, and 5. You have to show me directly step 4. Right now you need step, but if you practice again and again, like I will help you to do this, and then you will become so perfect that you don't have to do step 1 to 5 and you directly do step 6. But again, we will do more and more practice, but this is your answer. So in your exams or in your assignment, you just need to give me this answer. You don't have to give me step 1 to step 5. You just do it in your rough paper. And again, remember, if in your exam you write down cash account credit, raw material debit, you are wrong. Why? Because debit always come first. We always write the debit items, then credit, not cash account credit, raw material debit. Their debit credit is right, but the way to record the information is wrong. Everybody understand that? This information is very, very, very important, because step 2 is very important. If your step 2 is wrong, step 3 is wrong, step 4 is wrong, step 5 is wrong. So step 2 is very important, especially this information. So everybody understand? Can we do now next source document?
Teacher,
Yes.
can you repeat step 2 and step 3, because I don't know which is up and which is down.
Okay. So you have to find the items which are up and items which are down. In simple language, which items are affected because of this source document. If you read source document carefully, purchase raw material by cash. All right. In simple language, you can say that in this sentence, you can find the noun. So the noun is raw material and the noun is cash, right? You know noun. So noun is raw material and the noun is cash. So raw material is affected and cash is affected. 2 items affected. For example, okay, forget about purchase raw material. I ask you, for example, company purchased land and building. Company purchased land and building. Which 2 items or which items affect?
Land and building.
And only land and building
And company. Sorry.
then remember, if you what I told you last time, I said that item means give and take. Something give and take. If you purchase land, what do you give?
Money.
Money. Money means, don't call it money,
Cash.
because cash. If you say money, you keep finding money. Money, is it asset? Money, is it liability? Money is equity? Money what? And you can't find the word money. So use exact word. Cash, not money. Cash. So 2 items affect when you purchase land and building. Land and building and cash. This is your step 2.
Yes.
All right. Now step 3, because you did not understand up and down. Step 3 is very simple. If you purchase land and building, this land and building increase or decrease?
Increase.
Increase. And how about cash?
Decrease.
Decrease. So step 2 and step 3, actually step 2, 3 and everything is easy. The most important is step 2. Once you identify step 2, then everything is very smooth, everything is very easy, just you have to follow the rules. That's all.
Yes.
So everybody okay with this?
Can you talk again about step 4?
Step 4 is find these items are assets, liability, equity, income, expense. So just you have to check. You already know raw material. What is raw material? Like land and building. What is land and building? Land and building is an asset. Land and building liability. Land and building equity, income, expense. What is land and building? Tell me.
Land and assets.
Yes and no and. What is land and building?
Assets.
Assets. Yes. So land and building is asset and cash is
Expense.
Can you find, go and check what is cash? Did I say cash is expense? Did I use the word cash in expense? That's why you do not study at home.
Is it asset?
Yes, asset. So remember what I told you last time. 2 items can be asset, no problem. 2 items can be liability, 2 items can be equity, 2 items can be income, may not be income, but the idea is that it could be anything. Not so if one item is asset, it doesn't mean that second items cannot be asset. Maybe asset, maybe not. So just always follow the rules. So step 4 is land and building is asset, right? And cash also asset, right? Now you convert this up and down, which is asset up, cash down. Now you convert this up and down into debit and credit. Land and building increase. So land and building will be what? Debit. Cash decrease. So cash will be
Credit.
credit. Step 5 finished. And step 6, just you rearrange by start your journal entry, land and building account debit, for example, $5,000, cash account credit, $5,000.
Teachers, can you explain the differences between assets and expense?
The difference between?
Assets and expense.
Okay. The biggest difference between asset and expense is assets, the money you spend, which will give you return in future. Assets represent investment. Expense is not your investment. I repeat, assets means the money that you spend to invest. So spend means you use that money to invest. Invest means that will give you return in future. Like as your study, your education. What do you think? Your study or your education, is it expense or is it investment?
Investment.
Investment. Education qualification is investment. Why? Because once a time you spend money in education, whole life you earn money using this education. So technically education is your asset. So sometimes it's confusion between the personal life and the business life. But in company, in organization, whenever we spend money, like as machine, why companies spend money on machine? To produce product. Why produce product? Sell product. Why sell product? To make money. So see, assets help us to make money. How about electricity bill? Company run one machine and company has $100 electricity bill. Do you think this electricity bill is your investment?
No.
No, of course not. Because you already use electricity, you paid money, finish. You cannot say that I use electricity, I paid money, and after 3 months, this electricity helped me to make money. That doesn't make any sense, right? So that's the idea about it. Like a renting a room, renting a factory. When you're renting a factory or office, when you pay rent, do you think that rent is your investment?
I think no.
No, of course not. You use this house and you pay money, finish. All right, you're not waiting to make money from the money that you have spent. You paid the rent. Are you waiting to make money by paying a rent? No, of course not. But you purchase machine. Now you are waiting to make money from this machine. Money or benefit, any money or any use, right? That help you to maximize your profit. So that's the major difference between assets and expense. In both cases, spend money. Asset, you spend money. Expense, you spend money. But the purpose of the money to spend for expense and the purpose of money to spend for asset is different. So asset has economic benefits. Economic benefits means the future. asset will help me to make money. That's why we call it asset. Expense never help you to make money in future. All right. If any kinds of expense that help you to make money give you any benefit in future, that expense can become your asset, like as prepaid expense. Right? Raw material. You purchase raw material. Raw material is your expense. But if raw material become your closing inventories, become your asset, because in future you use this raw material to make money. See? So you have to be really focused or really careful when you are finding the difference between asset and expense. But generally, I can give you a very simple tip. If you still cannot figure it out, is it asset or is it expense? You just go back to the list of the asset. If anything is not in the list of asset, but it's a spend money, so obviously it's expense. Like as you pay salary to employee, money out. Now you confuse. If we pay salary to employee, is it asset or not? Just quickly go back to asset and check current asset. We have cash. No, it's not salary. Okay. Account receivable. No, it's not salary. Prepaid expense. No, it's not salary. So no, closing stock is not a salary. So obviously is not a current asset. Now fixed asset, land, building, plant, machinery, equipment, furniture, blah, blah, blah. No, it's not salary. The salary is expense, obviously. All right. So that's the simple trick to understand, is it expense or is it asset? But again, as you keep practicing again and again, then you will recognize that, oh, salary is not asset. Rent expense is not asset. Interest expense is not asset. Electricity bill is not assets. Marketing expense, pay money for marketing advertising is not asset. Land is asset. Building is asset. Plant is asset. Furniture is assets. Vehicle is asset. Closing inventory is assets. Accounts receivable is asset. Cash is asset. So if you practice again and again, then it comes in your mind like I am speaking, then you will be able to speak like this.
Teacher,
Yes.
in your example, say that raw material account is equal with the cash account. So in the latter case, they are still equal or not?
Always. If your debit and credit are not equal, you are wrong. Actually, you have to write down both same amounts. If you are not writing same amount, your step 4 has a problem. I will explain you later when you go to step 4. All right. So every time, whatever is your debit amount, just close your eyes, write down same number as a credit amount. And that makes sense. Like as I told you last time, purchase machine, $5,000. How much is the value of machine? 5,000. So that's why machine account debit 5,000. How much cash you pay? 5,000. So cash account credit 5,000. So that's why both are 5,000, 5,000. All right. So always equal. That's why I write down your DR, which is debit, equals to credit. Remember this thing. One more thing I forgot to write down. Make sure you also write down. One is this, and second thing, remember, if one item is debit, another item must be credit. It cannot be like this: raw material debit, cash debit. No, because debit here, debit means, what is the meaning of debit? Increase. And here, sorry, debit, and here credit means decrease. If one increase, one decrease. All right. So the idea is that it cannot be something debit, something debit. Finish. No, something wrong. Or maybe something will be credit, So this amount and this amount equal, then is okay. Then it's okay. But if you leave your question like this, if you leave your questions, your answer like this, then your answer is wrong. All right. Again, when you do that, you understand. Because why both debit? Because you made mistake. If you making mistake, both cannot be debit. If you make mistake, then it will be debit. If you follow the steps, one debit, one credit always, or the debit balance and another one is a credit balance. Both debit, both credit means wrong because you made mistake in following steps. It's just a tip to understand your question is right or your question is wrong. This very simple tip. Right?
So, can you explain me the actual meaning of debit and credit?
In reality, there is no any actual meaning of debit and credit because you can see, if I say, what does it mean debit? If I say debit means increase, always increase, is it true? No, because debit does not always increase. If you look at the asset point of view, you can say that asset point of view, debit means increase and credit means decrease. Liability is actually, debit and credit is just a, you can call it, it's a code to report the information in your accounts. But we have a history of debit and credit. I think according to which language is it? According to Latin. In Latin, the meaning of debit credit is plus minus, something like that. Latin or some other old language, the meaning of debit credit is plus and minus. But if you use the single word as a debit, it doesn't have any meaning because, as I said, if I say something debit, now something means, is it asset, is it liability, is it equity, is it income, or is it expense? So there is no any value of only single debit word. Debit word has a value when you attach with asset, attach with liability, attach with equity, attach with income, or attach with expense. But as a single or individual word, debit has a no meaning, no value. All right, so it's always used with asset, liability, equity. Same thing with the credit.
I have a question. Can you give me an example of what is liability and equities?
Go back and check, read, and you tell me. Go back and tell me what is liability. I'm waiting for your answer. Go back and tell me what is liability. So in the meantime, anybody has any question? No question. So if no question, now go to your second source documents. What is your second source document? Read and tell me.
Teacher,
Yes.
I have a question. When we pay the hospital bill, is that expense or asset?
It's a bill. Bill means it's an expense.
Yeah.
It's expense. It can be asset. Why? Because you already use the service and you pay money. That's it. The money you paid in hospitals, do you think that money you will use it to have a benefits? Has some kinds of monetary benefits? No, of course not. Think from the company point of view. Remember, don't think from the personal life point of view, because maybe personal life point of view, you go to the hospital and you did some medical care. That medical care maybe improve your health. That's, you will say, oh teacher, we have a benefit because I spent $2,000 for surgery, and because of surgery now I look more stronger, or now I look more handsome, more beautiful, so I have a more benefits. Yes, you are right. So that's why I think from the company point of view, not from the personal people point of view, because company is different than the people. Company has only one objective. Company always spend money to make money, but we spend money to make money, or we spend money to improve our health, we spend money to improve our education, we spend money to improve our body structure or whatever, right? So don't compare. Think always company point of view. We are company, we preparing accounts. That's it. We not a human. We are a company, right?
Yeah, thank you, teacher.
So now go back to your, everybody please go back to your second source documents and then start making journal entry and give me answer. Answer means give me step 6. Don't tell me step 1 to step 5. Just keep doing one by one. All right. Now, Nuin, I come back to you. Nuin Nop, can you hear me?
Oh, yes.
What is liability?
I've checked it, and it is unearned revenue. As I note,
You
it is
no.
unearned revenue.
Wait. You asked me a question. Teacher, can you explain to me what is liability, right? That was your question?
My question is like an example for a liability, like assets is land and buildings. So I'm pretty unclear.
Liability has many examples. Like assets has a many examples. Liability has many examples.
Yes.
Mainly there are two types of liability, short term and long term. And in short term, we have accounts payable, right? We have a bank overdraft. We have
Yes.
unearned revenue. We have outstanding expense, right?
Yes.
So are you clear now?
Yes.
Okay. Now everybody
Thank
please
you.
go to your source documents, number 2, and do it one by one. If anything you do not understand, you ask me. So second one is a sold machine, $1,500. Quickly finish this second source documents and then we go for break. Sold machine, $1,500. Make sure you ask me if you do not understand anything, but please do not copy any answer from your friends, because now we are practice. So better you ask me as much as you can.
Teacher, in the show machine, is that machine is asset and show is income?
Okay, can you tell me, when you sell the machine, when you sell machine, which two things will affect? Means when you sell something, what is give and take?
When I sell something, I will have the income. I will have the cash. And
Oh, no. Wait. Don't call it income. Don't call it income. Why?
cash.
Because yes, cash.
Yes.
What is give and take? Give asset and take what?
Cash.
Cash. So which two items affect?
Is an asset and the income.
Again, why income?
I see in the rules number 4 is income and gain.
Yes, but income represent normally for selling product and service generally. Asset is your product and service.
product.
Asset is your product. Are you sure?
This is
If asset is your product, why I'm writing over there asset and why I'm writing there income? Asset is not your product. For example, Apple company. Apple company has a machine. So what is the product of Apple company? Machine? No. Apple company sell machine to make money? No. Apple company sell mobile phone to make money, right? So machine is the asset of Apple company. Product is iPhone. So here you are selling asset. You are not selling. Did I say sold product? Did I say that? No. What I said sold asset. Okay, sold machine. Machine is asset. So two items affect. Which two items? One is
assets,
and second is
cash.
cash, not income. Remember that. Income,
Yes.
remember, the word income used for when we sell any product or service. All right.
Okay. Okay.
Generally when we sell product and service.
Sorry, teacher, are we doing exercise? Because I can't hear you clearly at the beginning.
We just doing B, sold machine. Yes, do you have any question?
Show must
B,
Where?
source documents. Remember when I explained? Okay, I'll share screen with you again.
Okay.
Last time when I explained you source documents, that's in the wait. Here, so you have to make all the journal entries one by one. 1, 2, 3, A, B, C, D. A, we already done it. A is finished, right? Now do it this one, B. And so means we have to make 4 journal entries. Okay, so let's have a look at the answer. So machine accounts, debit, cash credit, machine credit, not twin. Why machine credit first? Machine, why are you, many students are giving me credit first? Chow Lee, why are you writing machine account credit? Always debit item first. Machine, again, not twin also like this. Cash debit, yes, Nguyen Fish is correct. Cash account debit, machine account credit, yes. Bui Kwok, cash debit, machine account credit, yes. Han Nop, machine debit, cash credit. Why machine debit, Nop Han? Wrong, check again. Nop Chi, why are you giving me credit first? Ponboy, wrong. Hampton, wrong. If you say machine account credit and cash account debit, wrong, because debit item first. So the right answer is cash account debit, cash accounts debit and machine accounts credit. 1,500 and 1,500. Is that okay, everybody?
Teacher, you wrote that income, profit, and gain is always credit. So, what is gain here? Like,
Sorry?
you wrote that income, profit, and gain is always credit. So, what is gain here? What is
Gain means, for example, gain word used for the assets. So I don't want to explain right now, because if I explain right now, students start asking me that, teacher, why we don't use the gain in transaction B. So wait for the gain. Gain means when you sell the asset and you have a profit. This is called gain. But anyway, wait for the gain right now, because I haven't mentioned anything gain until now. So wait for it. Gain means profit, actually, in language, in simple language. Right? So everybody okay with this transaction B, source document B? Any question for source document B? If no question, then we can have a break. So after break, we start with C and D. If you want to do C and D, you can do that. But remember, we will not move on to step 3. We will be keep practicing. I think you need 1 or 2 more lectures to practice journals. So we are not moving to step 3. We just need more practice. We finish D, then I will give you more source document and you more practice. I will be keep giving you journal entries until you become perfect. All right. So now we can have a break. After break, we do some more journals. So I'll see you in 20 minutes. Okay, so let's check with the C, which is paid rent. So rent accounts debit, yes. Cash account credit, yes, that is correct. So C is rent accounts debit and cash accounts credit. 300, 300, right? Borrowed from bank. Bank loan debit, cash credit. Bank loan credit. Why bank credit first? When my student, do you understand that? Please do not write down credit item first. Everybody understand? Do not write down credit item first. So yes, some of you are correct, some of you are incorrect. So let me give you an answer. Borrowed money from bank, cash accounts debit. Why? Because cash increase. You borrow from bank. And bank loan accounts credit. Why? Because bank loan increase. Bank loan increase, liability increase. When liability increase, liability credit. 3,000, 3,000. So everybody okay with it? Is that okay, everybody?
Yes.
Okay, now let me give you some more questions to practice. Wait for me, I'll give you more questions so you can do more. You can take a picture if you want it. Okay, so I'll give you some more questions to practice. Okay. Here you have some more questions. I am giving extra 8 more journal entries. So borrowed from bank, 2000, sold product, buy cash, 1000, interest received, 2000, sold car, 3000, return bank loan. We return money back to bank. The money we borrowed last time, we return it back, number 5. Number 6, we sold share capital, issue shares. Outstanding wages and income received in advance. So do that. 5, 6, 7, 8. 5 is return bank loan account debit, cash credit. Okay. 6, sold share, cash account debit, share account. You can say share account, or you can say share capital account, same thing. Number 7, outstanding wages, loss. Why number 7 is loss?
About number 7. I mean, loss is time and
What is outstanding wages? Is it loss, or is it expense, or is it liability? Is it what is this outstanding wages?
In the number 7, I think the wage is increase. So
No, but okay. Tell me which 2 items affect in number 7.
it's my effect is the wage and the time.
What do you mean by
So
time?
so when the people spend more time to work, and they will get the outstanding wage.
No. Okay, tell me what is outstanding wages? What is this? Is it asset? Is it liability? Is it equity? Is it income? Is it expense?
I think the liability.
Which liability?
Yes.
Which
Outstanding wage.
Yes.
Yes.
This is out. So this is liability, right? So liabilities, is it increase or decrease?
Increase.
Increase. Yes. So our liability increase. So liability will be
Credit.
credit. So one thing confirm, outstanding wages will be credit, right? One thing confirm. What will be debit now? What is wages? What is wages?
It's about cash.
Did you pay cash?
That is
No.
I think wage is income.
Wages is income. Why wages is income? Outstanding wages, it's a liability. Why liability? So wages is your expense. So what is the meaning of wages? Wages means the money you pay to your employee to pay to your worker to work,
Yes.
right? So but outstanding wages means wages is your expense, but this expense is outstanding. So wages is your expense that you haven't paid to your workers. That's the meaning of number 7. Number 7 is wages is your expense that you haven't paid to your workers. So what do you think? Debit will be?
So it is a expense account. It's a debit, and
Yes.
liability is a
Not
credit.
liability, We don't call it liability.
Oh.
If you say liability, which liability? Because in liability we have many types. Is it accounts payable? No, because accounts payable also liability. So you have to tell exactly name of this one. I already explained you. What should be credit? Credit would be, I just explained you before. Sorry?
No.
It's
Just give me a minute and
Yes. Anybody else? Number 7. Give me the answer for number 7. Nobody number 7? Wages account, not wages account. Wages is income, wages is expense, wages is asset, wages is liability. What is wages? Wages are your expense. So wages, expense, debit, right? So what is number 7? You have to understand what is the meaning of number 7. Number 7 is a number 7 is number 7 means you have wages. Wages is your expense, which you haven't paid yet. That's the meaning of number 7. You have wages expense, which is 250, but you haven't paid it yet. So if you haven't paid it, it's become your, if you haven't paid it, sorry? It's become what? If you haven't paid it?
the debit.
Which liability? What is the name of this liability?
it's
Current liability.
Yes, current liability, but what is this? In current liability, you have many types of current liability. What is what liability is it?
Outstanding expense.
Yes, outstanding wages expense. And you know, outstanding wages expense is your current liability. And this current liability increased, right? So that's why this current liability increased. So it will be credit. One thing confirmed, right? And what will be debit? Did we pay money? No. Oh, wait. Did we pay money? No. We haven't paid yet, so no cash. So what will be affected? Expense. You have expense, you haven't paid. You have expense, so expense always debit. So wages, expense, debit. You haven't paid it, that's why outstanding expense, outstanding wages expense, credit. Simple. If I say you have wages and you paid, wages expense debit, cash credit, right? You have wages and you paid. You paid means cash reduce, assets reduce. So cash credit. But here you have wages, but you haven't paid it. So wages expense, debit, and cash account, outstanding wages are credit. Everybody understand that? So could be two situation. You have wages, you have wages. One thing confirm, you have wages. Wages expense are expense and expense are debit. One thing confirmed. But now question is, have you paid or you haven't paid? If you paid it, paid means cash out. Cash out, assets down. Asset down, assets credit, cash credit. One situation. Second situation, you have wages, but you haven't paid it. You have wages, so wages always debit because wages are expense and expense always debit. But you haven't paid it. You haven't paid it means your wages are due. If your wages are due, current liability, we know that. Which current liability? Something due, we call it outstanding. So don't write current liability credit. If you write current liability credit, you are wrong because as you know, in current liability, we have many items. So which items you are talking about? You confuse the users, right? So you have to go straightforward. All right. So answer is wages expense account debit. Why? Because it's expense and expense always debit. And outstanding wages expense credit. Why? Because outstanding is due and due is current liability and current liability credit. Everybody okay with number 7? All right. Now do it number 8. And I want to check who will be correct for number 8. Read carefully and give me answer for number 8. You do number 8 and then I'll give you homework and then we will stop. Quickly finish number 8, then I'll give you homework. All right, so let's have a look at the number 8. Cash account debit and unearned revenue accounts credit. Yes, that's right. Huin Zui, correct. Nguyen Phi said cash account debit, unearned revenue. Yes, it's a unearned revenue. Why unearned revenue? Because you received income in advance. Right? Kwan Bui said cash account debit. Yes, cash account debit. Prepaid expense. Is it expense? It's an income. It says very clear. Income. It's not an expense. So Kwan Boy, please check.
Yeah, okay, teacher. yeah.
So now, everybody okay with number 7 and number 8 mainly? Because number 7 and 8 probably most complicated for you, I guess. Everybody okay with it? Number 7, 8?
Yes.
Okay, now we stop here. So, but before we stop, I am giving you a homework. All right. So please, you do this homework. I will show you. So please take a picture. Here is your homework. So I am quickly reading for you. So, but everybody please take a picture first. All right, so I'm quickly reading for you. Number one is purchase material on credit. Remember, purchase material on credit. So now you have to go back and check what does it mean when you purchase material on credit. Number two, paid rent in advance, 1,000. Product sold to Mr. A on credit. Now you're selling on credit. Again, you have to go back and check. Number four, sold share. Number five, paid electricity bill. Number six, receive interest from bank. Number seven, interest paid to bank. Number eight, paid dividend. Number nine, unearned revenue. And number 10, products supplied for the unearned revenue for number 9. So in number 9, we have unearned revenue. And in number 10, that unearned revenue means we already supply product. So you will make two different journal entries for number 9 and number 10. For number 10, amount will be 100. Remember, for number 10, amount will be 100. For example, you can say on 9th of, let's say you can say 9th of December, we receive unearned, receive money, and 10th of December, next day, you supply a product to the customer. You can say that. All right. Everybody understand? So make sure you do your homework, and then you don't have to send me any homework. You don't have to send me email for this homework. You finish your homework and you keep it with you. So when you come to the class, next class, then I will ask you question. All right. Everybody understand? So if anything you do not understand, please send me email. Everybody okay with it? Any question? And do not forget your rules and everything what you have done, what you have studied today is very important. Next lecture, I will not start your next step. Next lecture, we will still do more practice. I will give you more difficult journal entries next week, but these journal entries are still okay. You can do that. That's still very easy. So when you come to the class next week, then we will more practice. So next week, we again more and more practice. So until you become perfect about journal entries, then we move on to step 3, which is ledgers. Otherwise, I will not move to step 3 because again, if you are not good at step 2, you cannot do step 3, 4, and 5. So I want you to become perfect in your journal entries, no any mistake, right? Then we will move on to step 3. Everybody okay with it? All right. Anybody has any question?